Insights on the 15th of July 2020. Business Insights is a very exciting webinar series hosted weekly on Mondays at midday by a panel of industry thought leaders for business owners who simply want to be in the know about the latest and most significant news and initiatives in the Australian business landscape that impact how they do business. Our panel of advisors aim to inform, educate, and provide strategic insights to the changes in the economic and financial landscape that affects small business. We aim to guide our viewers to navigate business challenges throughout COVID-19 and beyond. Let's now meet our panel of industry thought leaders. First up, we have Bernard Tusimau from MGA Insurance Brokers. Bernie, thanks very much for coming.
Thanks, Ian. Morning, guys.
Next up, we have Liza Garrido from Enigma HR. Lisa, welcome.
Hello, good morning to everybody.
Then we have Rob Skeen from Oasis Skeen Property Buyers Agents. Rob, thanks very much.
Hello, Ian. Hello, viewers. Thanks for having me.
And we have Sam Ghoreyshi from MoneyClip Private Wealth. Sam, thanks very much for being here.
Thanks for having me on. Thank you.
And my name is Ian Maclachlan and I'm from Imperium Accounting and Tax. So today we're going to start with Liza Garrido from Enigma HR. Liza, can you just give us a bit of update what is happening in the employment and HR landscape, please?
Yep. Thanks, Ian. Thank you. I'm first up. That's great. So last week, I don't know whether the viewers have recalled or whether you guys recall, I talked about the new business as usual, which is working from home, with 64% of professionals able to work remotely now, as studies have indicated. And about 63% of small business has decided to have a percentage of their workforce continuing to work from home, and an increased demand from employees or staff members to work from home still. So whilst studies have indicated that there's a lot of good about the remote workforce because it has helped employees become a bit more productive, there's also another aspect of working from home that HR managers and HR leaders are actually quite concerned about, and it is the culture of causing burnout. So a study from LinkedIn suggests that 86% of employees who have been forced to work from home because of our current situation have also felt the pressure to overperform. So, you know, with the layoffs, the stand downs, the pay cuts happening across all industries, staff members and employees have been feeling the need to push harder to convince their managers that they're worth keeping around. So as a result, what we now call telecommuters, people that work from home, end up working an additional 28 hours a month that LinkedIn have said from their study. So in that study as well, 31% have suffered from poor sleep quality, 30% from increased levels of anxiety, they've suffered that, and another 24% from poor mental health. So this is real, and this is a current study from LinkedIn. So the real concern that we now have as managers, thought leaders, business owners, is that we've noticed is that stress and strain from working from home over a long period could cause staff to actually slip away from work out of sheer exhaustion, right? So there's another study from a platform called Blind that pointed out the reason. So, and I think we can all resonate with this, right? There is one, there's no separation between work and life. Second, the unmanageable workloads, because other team members may have been stood down, so others are actually taking the impact of that. Job security concerns. Do I still have a job next month is a big factor for people feeling this additional stress. And of course, I mentioned this last week, which is a general lack of support from their managers. So I spoke last week about upskilling the management team. Anyone that's managing teams or people should actually learn how to manage remotely. And the last factor that's caused the strain is the lack of control over the quality of their work. This whole new way of working remotely is causing that. So a UK advocacy group called Mental Health Foundation also indicated that people working from home during these unprecedented times are at a greater risk of burnout due to the high stakes environment we find ourselves personally and globally. And this high stakes environment has caused, there's a new term now it's called e-presenteeism. It's a toxic culture of people needing to dial in and work outside of official hours over a prolonged ongoing basis. And we all know that this is not sustainable. because there's a lack of distinction between work and personal life today. So as business leaders, managers, and business owners, the question I do ask is, are you equipped with the tools, knowledge, and skills to handle cases of burnout amongst your remote workers? So how do we handle that? And there's a few things I'd like to, I suppose, give as food for thought. So are you now changing your work patterns? A third of the companies surveyed in that same study have begun to stick with official work hours and have actually banned any workplace communications outside of that schedule. Others, or a similar number, have introduced more flexible work hours and additional mechanisms for people to take time off. So these are some things that you could consider. HR leaders and managers also need to rethink the learning and development strategies that they're putting in place to support this new work reality. So a challenge is to develop a learning culture to support new skills, particularly, as I said, for remote managers. So when you think of creating this framework, you need to ensure that it's a framework that encourages teams to be productive. And how do we know that a team member is productive? Revisit and evaluate your expectations from them. Remember, you cannot be accountable for something that you're not clear about or something that is unachievable or unrealistic. So revisit the expectations that you have of your team members. Create a framework that makes them feel valued. I talked last week about constant communication and touch points with them. Now, bearing in mind, touch points within the scheduled work hours that you're actually asking them to work within. So make sure that you keep that in mind. Talk about burnout. Have an open conversation about how people feel. Conduct an assessment on what they probably need to cope with the current reality and see what training and resources they need to support that. I also mentioned last week the plethora of online training resources that is available at very low cost. So these are the things that you might need to consider as you move forward in the next few months in this new reality. So that's it for me.
Thanks very much, Liza. Some really good points there. We might get a Sam Ghoreyshi from MoneyClip Private Wealth now. Sam, if you could just give us a bit of an update of what's happening in the stock market.
Yeah, sure. So interesting week last week. The market was down 2.6% on the back of risk of a second wave potentially, and also some realization that the economy will take longer to get back. We saw quite a big decline towards the end of the week here and also in the US. And I guess, you know, it just goes to show that the market is very vulnerable to any correction. Although there is momentum in the economy and it's rebuilding at a reasonable pace at the moment, not at the same pace across the world, I guess what it's really showing is that the market is very sensitive to containment. If there's good news about containment, market goes up. If there is bad news about containment, market goes down. So that volatility, the increases, decreases, is likely to continue for a period of time, in particular into the next half, because by then you'll have all the companies starting to announce the results for the first half of the year, and we'll see the real impact of what's actually occurred to these companies and cash flow in particular in that time. Now, interesting to know that in the last 3 and a bit months, the companies have taken actions to shore up their businesses. There's been about $25 billion worth of capital raising to date, about $11 billion in dividend reduction. So companies not paying dividends or reducing their dividends of 11, and $1 billion of dividend to go, as in at some point in time they may pay those, but there's no real date for when they're going to be paid. Obviously, that's going to have an impact on all the investors, especially the self-funded retirees. So a little bit of a worrying sign from that perspective. And obviously, we're hoping that all these companies can get back to some normality. So then that dividend flow can continue into the next half. That's basically what's been happening over the week in the markets. And of course, another interesting week to come, because as it stands right now, every week is a different story.
Absolutely. Thanks very much, Sam. We might go to Rob Skeen now from Oasis Skeen Property Buyers Agents. Rob, what's happening in the property market?
Thanks, Ian. Well, last week, Domain Property Group recorded 415 properties up for auction. Numbers are slowly creeping up, and I guess as there's more listings are available. People that weren't selling all of a sudden are seeing houses that they can buy, and they're putting their houses on the market. So things are a little bit more freer in terms of property listings. The clearance rate was quite strong, 69%. So almost 7 out of 10 properties selling at auction. And that's up almost 10% on last week's clearance rate of 58%. And it really is a tale of two cities. It seems to be that houses are selling well, residential homes. And on the opposite end, high-rise apartment buildings are absolutely struggling to sell. And I guess it's the low yields that they're achieving at the moment. And also, I think, tighter lending for these types of properties. I want to mention again the Home Builders Grant that was rolled out 2 weeks ago, $25,000 of free money from the government. That's for new home builds where the property value doesn't exceed $750,000. And also renovations, 25 big ones for people looking to renovate their homes between the values of $150,000 and $750,000. However, the value of your home must not exceed $1.5 million. Not going to help a lot of people in the metropolitan areas in Australia, but it's certainly going to help a lot of Australians living outside of those areas. In regards to the rental market, the rental values are down about 8% across Sydney. And with zero migration, it's causing a huge oversupply, certainly in the apartment sector. My tip of the week, landlords, if you've got good tenants and they're coming up for renewal, be guided by your property manager. Find out what the market value is. If it's reasonable, then, great, keep it where it is. But if you do need to get a rent reduction, I think assess that, offer it to your tenants, and maybe say, look, if we renew for another year, we'll give you this reduction. Gold tenants at the moment, that's what you want to look after. And that's it for me this week.
Thanks very much, Rob. That's a really good tip there. Let's go, pardon me, to Bernard Tusimau now from MGA Insurance Brokers. Bernie, what's happening with general insurance?
Thanks, Ian. Over the past few weeks, I've spoken about the importance of insuring. Your current insurance policies are reviewed and discussed with your insurance broker or your insurance provider. As businesses return to normality, it is even more important that you review and ensure your insurance policies are up to date. Now, guys, over the last couple of weeks, I've spoken about a couple of common themes. One, ensuring your premiums are reflective of how your business is performing during COVID-19. Ensuring your premiums are reflective of how business is tracking at this time. And secondly, ensuring you review your insurance covers to ensure that, your business is best protected during COVID-19. Now, a couple of common themes about insurance that I've spoken about, and I know Lisa's touched on these over the past couple of weeks. Firstly is workers' compensation, making sure that your workers' compensation policy is up to date and it is operating whilst your staff are working from home. Now, there's a bit of a grey area whilst working from home and whilst they complete their work and then return to normal family life. You just want to ensure that your workers' compensation policy is covering these types of aspects. Now, again, to review your insurance premiums for workers' compensation, the premiums are driven off two factors. One, what is your business activities? And secondly, what is your wages? So generally in the workers' compensation space, or your premiums are based on these two things, and is what is known as a WIC code. Now, the other policy I want to touch on again, and I've spoken about this insurance policy the last couple of weeks, especially now that businesses are returning back to normality, employees are being laid off, and some businesses are becoming insolvent. Now, management liability policy is quite an important policy, even more particular for SME businesses. Management liability is a policy that protects your business practices and your business decisions as a business and as a director of the business. The policy is made up of different sections. One is directors and officers insurance. One is employment practices liability. Another is the statutory liability insurance. And lastly, employee crime. Now, employees practices liability, Lisa's touched on this, during this uncertain time, you want to make sure you as an employer is best protected for claims that arise from your employees and your staff. This can be in relation to award rates and being paid, could be in relation to circumstances and standards that you've sort of set during these COVID-19 times. Could be in relation to bullying, could be in relation to unfair dismissal, could be in relation to harassment, pay rise disputes. So these types of scenarios where an employee brings claims against you as an employer, you want to make sure that your employment practices liability policy is in place. If you don't have one, speak to your insurance advisor to make sure that they can provide some insurance quotes for you. Another policy that we keep speaking about is the importance of making sure, and Rob's touched on this, is making sure that you do have your landlord's protection insurance policy in place, making sure that you have rental default policy in place. So it's near impossible to take out an insurance policy right now because of obviously, COVID-19. But if you do have this insurance policy in place, make sure that your tenants who are doing it tough, just make sure that they provide the relevant documentation if you do need to lodge an insurance claim under your landlord's policy, that everything's up to date. Again, just be strong, make sure your insurance policies are reviewed. If you have any questions whatsoever, speak to your insurance advisor. That's all for me this weekend.
Thanks very much, Bernard. That's fantastic. We might go back now to Sam Ghoreyshi from MoneyClip Private Wealth. Sam, can you just explain to us how fixed and variable rates are set?
Yeah, sure. Very good question. So many people think that when the Reserve Bank announces the cash rate, that sets all the rates for all the banks. But that's actually not the case. So the cash rate is the base rate that the banks use, and often the variable rate loans are set off that. So cash rate plus a margin is what the banks will charge. Obviously, that goes up and down according to essentially what the Reserve Bank is doing, as well as the banks taking into account their own cost of doing business and applying a percentage to that. Often people think that because the variable rates are going down, for example, fixed rates are going to go down or vice versa. That's actually not the case, because the fixed rates follow not the cash rates, they follow the bond rates. The bond rates are set in the market. Bond rates are your 1 year, 3 year, 10 year, 30 year bond rates that you may have heard. And those bond rates could be government based or could be corporate based. So the cost of those bonds are going to be different to your normal cash rate that the RBA sets. And hence you can have periods whereby there's a mismatching of how the rates might play out. So for example, variable rates might be going down whilst the fixed rates go up. And that would be because the bond rates are going up at the same time, but the Reserve Bank rates are going down. So it's important to understand that they operate somewhat independent of each other. Banks can also impact on those themselves, but although they tend to just basically use the bond rates as the basis for them to look at that. Now, of course, anyone who wants to go into a fixed rate, they do so normally because they want to have certainty of making a certain payment of cash flows over a period of time. At this point in time, it's quite interesting because normally fixed rates are higher than variable rates, but right now they're actually cheaper by a function of anywhere between 0.3 and 0.5% versus variable rate loans. So certainly it's a better proposition to consider right now, but you also need to be mindful that if you ever break a fixed loan, you would have fixed costs that you have to take into account, and obviously speak to your credit advisor about that as you see fit.
Thanks very much. Some really interesting insight there. Now, it is the 15th of June. Apologies if I said the 15th of July earlier on. And that's a really important date because it only means that we're 15 days out from the end of financial year. So that means that we only have 15 days to finalise tax planning for small businesses. So there's a couple of really important things here this year that I want to go through. So the first one is the $150,000 asset write-off. So there's just a couple of key points with this. Now, first of all, the government did mention last week that they've now extended this until the 31st of December 2020, which I'm not at all surprised about. Remember, at 1 July, it was going to go back to $1,000, but they've now extended the $150,000 limit to the end of the year, being 31 December. So that is an amount which is excluding GST, which is a really important piece to be aware of. Another important piece is, this question gets asked all the time, how does the car depreciation limit come in this $150,000 asset write-off? So the ATO has said that the car limit, if it's a passenger vehicle, will still apply. So that's $57,581. So that limit still applies, okay? So that's something really important to be aware of with that $150,000 asset write-off. Something other to be aware of is just remember that next year, For small business, the company tax rate changes to 26%. So at current, we're at 27.5%. So that's another really important piece to remember when we're doing our tax planning. And we're looking at things that might fall this side of 30 June or not. Another one that I want to touch on is superannuation contributions. Now, the maximum that an individual can contribute if they're under the age is $25,000. However, this year is the first of 5 years whereby in previous years you didn't make that $25,000 cap. You can make that up this year. So you could essentially contribute more than $25,000 this year, which is something that I'm finding that a lot of people aren't unaware of. So when I'm sitting down with my clients going through their tax planning, that's something that we're looking at. Okay, did we contribute the $25,000 last year? No. So let's look at an example. Say they only contributed 20 last year. There's a shortfall there of $5,000. So this year they could essentially put in $30,000. So that's something really to be aware of. Just another quick update. It's not a big one, but it's just worthwhile going through. Each week I do want to just touch on things that the ATO has changed. So another thing is that the 5,000 kilometre method to claim for motor vehicle expenses, they have increased this rate from 68 cents to 72 cents as of next financial year. So that means that if you claim the maximum 5,000 kilometres, you would get a deduction of 3,600. So just a couple of really important points there. One is when we're doing, when you're looking at your tax planning, make sure that you then put any estimated liability into your cash flow. So we generally know that when your tax return will be due. So it's really important that you put that in your cash flow so your business is able to account for that. The other one is the super contributions, and then also just the company tax rate changing from 27.5% to 26% next year is really important to be aware of. So I might go to the panel now and see if anyone has any questions for any of the other panelists.
I've got a question for you, Ian. Just in relation to the 150K write-off, if you already have the asset, can you still write that off up to 150, or is it anything that you're going to buy new?
Sorry, Sam, can you just say that again? I just missed that, sorry.
If you've got the $150,000 write-off, can you write off existing assets you have all the way down to zero? Or is it anything that you have to buy brand new or new?
It's generally brand new. So, and they have to be installed and ready for use by 30 June. That's right. However, pool balances, so items that are allocated to a pool, if the pool balance falls below 150 that was pre-existing, then that can be written off.
Right, okay. And then with the 26% tax rate for the companies, does that apply to all companies, or there are certain companies that stay at 30%?
So yeah, so that's for companies with turnover of less than 50 million. Yeah.
Quick question for you, Ian. Can you use that to, for redesigning your office, say, quick office renovation?
It's a really interesting point, Rob. So it comes to, okay, so when we look at depreciation, there's two major types. There's capital allowances, which is, purchase of plant and machinery. And then we've got another item which we call capital works. Okay, so there's capital allowances and capital works. Capital works is generally for capital costs of construction. Capital costs of construction aren't eligible for the $150,000 asset write-off. So whether or not the renovations in the office would qualify for capital allowances or capital works, most likely capital works. However, you would have to probably assess each one on a case-by-case basis. But yeah, you definitely need to make sure that before you go ahead and plan for that, you definitely need to qualify with your tax advisor whether it's going to fall, whether it's going to be a capital works or a capital allowances.
Gotcha. Thank you for that. Question for you, Sam. How much harder is it to get an investment loan today compared to pre-COVID?
It's definitely harder on a few different fronts. Firstly, in the last few years, the assessment rates that the bank used to use to calculate the serviceability of the loan was quite high. So already that was difficult to do. Since then, they've dropped those down per APRA's recommendations and guidance. But what's actually occurring now is a whole bunch of other things, and that's around the fact that a lot of lenders now only take sometimes 70% of the rent as income, and they're very insistent on adding the extra cost of the rental property as extra living expenses onto the calculations. Which, of course, you know, the function of less income and more expenses can knock some people out, or may mean that you might not be able to borrow as much as you wanted to, as you did in the past. Banks are still open. They would still, you know, they're happy to do investment property loans, so there's no issues from that perspective. But I guess the filter that they apply is just that little bit tighter than it was.
So Sam or Rob, so what's the impact of all of this with investment property buying then? And often investment property buyers would look at apartments or high-rise buildings, you know, properties in high-rise buildings. Has there been any impact on that, particularly with you, Rob, in terms of the property buying that you guys do?
Yeah, look, definitely. I think, you know, we always say to our clients, before you make any decision to buy, make sure that your employment's secure, firstly, and secondly, make sure that you're able to get the finance, so your finance is secure. And if that's the case, then we'll push on and buy them something. And I guess it does affect what we advise them, you know, and usually it's if you are going to buy an apartment, buy in an established area, in a smaller block, you know, things that are going to future-proof it as an investment. And, you know, it might be something that has a bit of a wow factor with it, something unique, whether it be a second balcony or a second car space. It might have a water view, all these sorts of things that will underpin the investment and give them good capital growth in the future. Certainly staying away from, you know, these new builds that are way out west or south, and certainly staying away from high-rise apartments.
Thank you.
Quick one for you, Liza. With what you were saying in people's mental health as well as personal health over a long period working from home, would it be pertinent for, say, some businesses to send their staff back to the office? And I know in saying that some staff don't want to go back. They're loving this working from home arrangement. Is there a fine line? You know, is there something they could do to please both?
Well, look, yes, actually there is, because a lot of businesses are looking at that hybrid framework where a portion of the staff work remotely, and those that actually are essential and need to be at the site or on site are actually on site. So the critical thing is when you have a mixture of you know, workers in that sense, you really need to firstly review exactly what you're expecting from those working remotely. Because essentially those that are working on site, you can carry on business as usual with the KPIs or key performance indicators or success factors and how to measure their success. But the remote workers need a bit more attention. And there's a risk of using the remote work situation as an exchange for daycare, you know, because, you know, the rising costs of maintaining expenses, particularly for people that have had reduced salaries, that's factored in when people actually suggest that they want to continue working from home. Some genuinely obviously have a need and a reason to work from home, and you need to apply the approval to work from home on a case-by-case basis with the proper consultation methods to make sure that you're making the right decision for your business as well as for the individual. So there are a lot of mechanisms that employers need to really consider when they decide a certain group of people will continue to work from home. And the first thing is to look at, are you okay? And are you really okay? And how can we help you maintain or sustain that situation? And again, approach it on a case-by-case basis by reviewing their role and the expectations, and also the scheduled work hours. You know, they do need to switch off. I mean, I think all of us have experienced this of late when we've all had to work from home. You tend to be working from 7 a.m. and you're still working at 10 p.m. And so they don't tend to switch off. And the studies post-COVID or recent studies have indicated that there is a real mental health issue And even that is a topic that's taboo in conversation. So again, have those open conversations with your team members to see if they need any more support than what you're able to give or what you're already giving.
Absolutely. Well, let's hope now that with the gyms back open and that people start going back there and improves their mental health. I know that I need it. I've been really waiting for it today myself.
And pubs, don't forget the pubs.
Yeah, I do have clients who are in the professional services sector, in family law, and the increase and rise of family law matters is phenomenal. It's staggering, actually, which indicates that all of these stressors, being confined in the same environment with potentially a partner that you obviously, no longer get along with, and maintaining a certain level of performance at work because you want to keep your job. All of these factors actually impact all the mental health issues that studies are talking about today.
Absolutely.
So Bernie,
does anyone else have any more questions for today?
Well, yeah, Bernie, I'm wondering, have you guys experienced any kind of workers' compensation claims in relation to stress or mental health stress?
Well, I think it's per industry. There hasn't been any up-to-date reports. Been up-to-date reports in relation to an incline in employment-related type claims. But we will probably see the fallout in the next, 1 or 2 months as people start returning to work. Definitely is an increase, but not sure about, what that exact number is.
Yeah, thank you.
And Bern, just the last one, if somebody's working from home and they have an accident, where does the employer stand on that?
Just depends. Where workers' compensation stands at the moment, it's workers' compensation specific act, and if it's during work hours and the accident happens during work whilst you're at home, then you deem it to be a workers' comp act. But the grey area is how do you determine when someone's on their lunch break? How do you determine whether someone's knocked off for the day? Because for me, literally, I walk from my home office to the kitchen, which is 3 meter walk. And, how do you determine when someone's on the break? So workers' comp stops when someone's on a lunch break or a morning tea break, or when someone's finished work. So there's going to be a massive grey area trying to determine, when and what happened. And I think, it's just going to come down to a case by case basis when they lodge the claim. I think it's going to come down to being honest.
And also, Bernie, when they lodge the claim, the first thing that will be investigated is the working from home policy. Do they have one? What are the parameters around that? And has the employee or employer, complied with that? So again, there's a lot of work, in HR regarding that. And it'll be interesting to see, maybe in future as we get more of these reports, what you've got to say about that, Bernie, from the industry itself.
Definitely, Lisa.
Absolutely. Thank you very much. I'd like to thank all our panelists today, Liza Garrido, Rob Skeen, Sam Ghoreyshi, Bernard Tusimau, and I'd like to thank all our viewers and listeners, and we look forward to seeing you next week, which will be Monday, the 22nd of June. Look forward to it. Thanks very much, guys. Have a good week.
Have a good week, guys.
Thanks for being a great host again, mate. Yes.
Bye.
Bye.